Hey guys, you would like to know what is the secret of debit and credit, why they are still balanced at the end in the balance sheet, and how they are recorded, which one of them is decreasing, which one of them is increasing, all they mean increase or all they mean decrease. Be with us till end of the video. This is Milad Akbari from Akbari Education. Today we're gonna cover the secret of debit and credit and double entry system with examples and practice questions. Exactly what we want to cover is why debit means increase and decrease in many situations, and why credit also means debit and means increase and decrease in many situations. That's why we want to cover in which cases it means increase and in which cases it means a decrease. So let's go what we're gonna cover in this video. In this video we will discuss about double entry system and duality concept. Duality concept will come from accounting equation, which is the balance of asset equal to capital plus liability. We have a video, I will insert the link here at the top. Go to that, learn that, review that first of all before continuing this video, because you need to understand this balance, why they are balanced at the end of the case, why all the transactions coming and affecting these three items, revenue and expenditure also, but still they are balanced, and the focus and secret of that is revealed on that video. Go and see that. And we will come to that, to the secret of debit and credit, and of course, as always, we have some examples and practice questions. Let's start our work. First of all, double entry system. Another name given to that is bookkeeping system, and some of the time it's called duality concept. I will come on duality concept. Double entry system means that every business transaction at least affects two accounts in equal and opposite manner, and at least two accounts. For at least two accounts, I will come that there is possibility that it affect more than two accounts in next slide, in next part of the our class. But before that, in equal and opposite manner, it is revealed on that accounting equation that, of course, in some of the cases we have source of finance as a capital. It comes to the business as a cash. Both sides of the business will increase. It affects both sides. And in some of the cases, we reduce the level of cash and we purchase some equipment instead of that. In what side? But in opposite manner. How? That's it. You can go and an accounting equation video. But for now, we are transferring the addition and subtractions which occur in accounting equation to the double entry system, how they are still balanced. For the duality concept, this is another name given to the double entry system, and the case is here that it will affect two sides in equal and opposite manner. But as I said, at least it will affect two accounts. For the first one, suppose I have received some cash for my sales. The cash will be one account, the sales will be another account. So two accounts has been affected. That type of entry is called single entry. But there are possibilities that I receive some cash for the receivable and I have allowed some discount. In such cases, the three accounts will be affected. Let me go with an example, very simple example. Suppose I have received cash. Of course, we will come how the debit and credit will occur and incur. And cash will be debited, suppose by $100, and in other side I have allowed some discount allowed. Be with the channel, we will have some more videos on how the discount will work, whether it is as expense or whatsoever. So suppose I have a discount allowed of $20, in other side $120 reduced from my account receivable. It will be credit of account receivable for $120. So you can see we have two accounts in one side and one account in another side, three accounts. It can be more even. and that type of entry is called compound entry. So let's continue our work with what we have, the great secret of debit and credit. Why and where the debit means increase and means decrease, and where the debit means decrease, credit means increase. These are the points which really confuse the students in undergraduate and postgraduate studies, and those who are starting their certifications in accountancy and professional accountancy. These are the basics which make confuse, and we will reveal that. But before going to that, let's say why it's called debit, why it's called credit, and still they are coming with DR and CR. This is one of the confusing points which lots of research done on that, because accounting is not from today, it's a long way coming to today. So the three assumption exists. First of all is, let me write debit and credit first. Debit and credit. The cases here, in credit we have CR. Okay, that's good, maybe possibilities there that first CR is the credit, but there is no R in debit. Why they have considered that as DR, The three assumptions. First of all, they say that this is debit records and credit records. That's why they are bringing that as DR and CR. One assumption, and the second assumption is it has been taken from a Latin word which has a Latin root of debere and crediere, and that's why they have considered as DR and CR. And the more strong assumption is, which is that the DR is coming from debitor, dator, and the creditor. Dator means owe to you, and creditor means you owe to him. So that's why the DR and CR come. And the third one is the strongest assumption that most of people are considering that, and those who are expert in accountancy history are telling this, the third one is the correct one. Let's continue with the revealing the secret. We have T account, the ledgers. Of course, be with the channel. We will have a deep discussion with the opening and closing and what are the ledgers, the types of ledgers. It will come very soon. But in the ledger, suppose this is T account. The old name is T account. It's the same of T alphabet. That's why it's called T account, and it have a debit and credit. Always the debit is in right side and credit is on left side. And to abbreviate that, they will write debit and credit. Remember this one, because it will never change. Of course, the entries will affect two sides of that, but debit is always right side and credit is always left side. And it does not mean that debit is always increase and credit is always decrease. No, never. We have a golden father of the secret, clear. Let's continue with that. What does clear means? Those who continued with us in the channel, I have told you that remember the word clear. Clear will help us more. Let's go to that. Clear. C-L-E-A and R. We can divide the clear, which is capital, liability, expense, asset, and revenue, to two categories. But before all, you know what they are? What's capital? What's liability? Expense, asset, and revenue? You don't know? Where they go? Are they in income statement or balance sheet? You don't know? Here is a link. Go to that first of all. Pause this video, open a new tab. Go to that, learn that. You need to understand that deeply before coming to the debit and credit and how that's working. So go to that, learn that, and come back. But those who know, let's continue with the clear. We will divide this in two categories. First one and the second one. The first one is expense and asset. Expense and asset. Expense and asset always, in expense and asset, always. The debit means increase. The debit means increase, always. Means when the expense incur or the expense is increasing, it will be debited. The asset is the same. And any item which come under this category, the debit means increase and the credit means decrease. And opposite side, for the decrease, there will be credit. So any transaction which will be decreasing, you will record it on the left side as a credit. In other side, we have the capital, liability, and revenue, the big families. Capital, liability, and revenue are the parts which are working opposite this. It means the increase always will be credit. You will record it on the left side. The increase always will be credit. And for the decrease, you will be debiting the account. So whenever any item under this category is decreasing, you will be debiting that. This is the secret behind that. And you can record every transaction based on these rules and still following the case that they are equal at the end of your period. So this is about clear. We have another item as a withdrawal, which is drawing. This is a cash, the owner of the business coming and receiving from the business, drawing from the business. This is also something which is debited. It is not expense. This is not something expense for the business, because there are some concepts. In future videos we will come to the concepts and principles of accounting. But to remember, drawing is something which incur to the business and decrease the resources of the business. So think of that like expense nature. This is not expense of the business, like expense nature. So come and tell that, okay, whenever the drawing increases means incurring, it's debit, and when it's decreasing, of course decreasing is not possible, but when it's decreasing, it's credit. The same nature that the expense have. That's the word clear. Let's continue. You can see here that we have two categories, CLR and EA. Whenever you say I have some cash in my account, in my bank account, that means you have some amount, and amount is available. That something has been debited and it have a debit nature. That's why expense and asset always have a positive balance. It is possible to have a negative balance, but in most of the cases, due to its nature, it's called it have a positive balance. And positive is the debit. That's why it's called they have debit nature. And in other side, we have CLR, capital, liability, and revenue. They are the cases which we say they are opposite side. And suppose a company, an owner brought $5,000 to the business. That $5,000 is a capital of the business. So it will increase. Capital increases part of this and it will be credit. That's why it's called credit nature. And these three are calling credit nature. Let's continue. We have an example here. As always, we are practicing some example in our videos on the board, traditional method. The example have 6 parts. The first of all is set up the business with $5,000. What we're gonna do, we will post a journal entry, which is debit and credit, very easy, and we will transfer that, post that to the T accounts in simple way. Okay, first of all, the first transaction we have is set up the business with $5,000 cash. Means he brought some cash to the business, which the level cash is part of asset, current asset, and the level of asset has increased. And another side, what we have is the capital of the business. Capital of the business also increased. So both of them increased. The first of all is cash. Cash increased. Increase of that will be debit. EA, expense asset. So cash increase will be debit by how much? By $5,000. $5,000. It has increased. So that's debit. Easy. EA, expense, asset. And another side, the capital of the business increased. Capital was part of CLR. So when the capital increased, it was credit. Exactly. You will come and credit the capital by how much? $5,000. A point to remember, please put some space here. This is professionally acceptable to at least distinguish between the transactions which are in debit side and which are in credit side. So make this space, debit and credit. So you know the rule. How we gonna post that to the T accounts? We need T accounts. Very easy. The first T account we need is, and the second account is related to cash. The first one is related, sorry, the first one is cash, and the second one is the capital. For the cash, for the capital, these are the T accounts. You can see, first of all, cash has been debited. This is debit. I will write only for one of them. Debit by how much? $5,000. And the next point is 5,000 capital has been credited. $5,000 credit. This is it. Go to the second part. Purchased equipment for $2,500 cash. Let me write that. Purchased equipment. So equipment is part of asset, an item under non-current asset, fixed asset. So when the asset increase, the level of assets in whole increase, it means it is debit. EA, increase, debit. So I will debit the equipment. Equipment will be debited by how much? $2,500. $2,500. And what has been decreased? They said you paid as a cash. An example said that you paid as a cash. So the level of cash decreased. Expense and asset, the decrease of asset was credit. So you will credit the cash for how much? $2,500. Remember this space. This is it. Oh, I need another extra account as the name of equipment. So I will draw that. Equipment has been debited for $2,500, and my cash has been credited for $2,500. One point you remember, you can add the date of the transaction, the narration of the transaction, or the referencing to the entry, everything inside the ledger. You can make it bigger. So it's possible, but we are only simply doing an example for the secret of debit and credit. Debits and credit. Let's go to the third part. Bank loan of $1,000 he have received. So what is the case? He received $1,000 as a loan. It's liability. Liability is increasing. Another side, of course, my cash will also increase. Increase in liability was CLR. Increase was credit. And increase in cash was asset. Asset was increasing by debiting. So what we're gonna do? Our cash has been increased. I will not insert the debit and credit again. You know that already. So my cash has increased by $1,000. It's debit, part of asset, EA, debit. And another side we have liability. Liability was part of CLR. My loan, bank loan has increased by $1,000. So keep in mind, this is debit. I have considered this is credit. This is my space. That's it. I need to post cash account. I will insert it only. I will debit. I will post it $1,000. And on the loan side, it's credit. There is no account. I need to create one. Very easy on the board, isn't it? I will only draw a line and I will write loan, and 1,000 has been credited. Okay, this is 1,000, this is 1,000 debit and credit, still balance. Part 4, purchases of $800. Of course, purchases of inventory will come under inventory. How we gonna record that at the beginning, opening of the year, at the closing of the year or period. This is another video. Be with the channel. It will come very clearly. We will discuss about International Accounting Standard 2, the ways we are recording, the ways we are valuing the inventory, and these things will come soon. But for the meanwhile, we simply consider purchases as expense. So there is purchases of $800. Purchases as the nature of expenses. EA, an increase or incurring, means debit. So purchases is debit for how much? $800. $800. And another side, I need to pay some cash, or maybe it's on credit. If it's on credit, it means that's a liability for you. So you will write it payable, and payable increase in liability was credit, but now it's cash, and my level of cash has been decreased. That's why cash is credit. Expense and asset, increase debit, decrease credit for $800. So I will record that purchases. There is again no account, so I will create. This is $800, which is posted to the purchases account. The name of account is purchases account, and $800 will be debited here. $800 debit, and I have paid for that cash. Cash was decreased. $800 cash will be credited to its relevant T account, cash. Part 5 is cash sales of $1,000. $1,000 I did the cash sales. So first of all, there is input of the cash to the business. I have received some cash. The cash increase was debit. Cash to the business, debit by how much? $1,000, my cash sales. $1,000. And in other side, my sales, income, revenue, let's use it for this level as interchangeably. Of course, there are minor differences between them. But the sales increase. Sales was part of CLR. And increase what, or incurring, was credit. So my sales credit by $1,000. Cash is debit. I will insert it. $1,000. And sales was 1,000 credit. Oh, there is no account for sales. So let me write it here. This is another T account with the name of sales, and there is credit $1,000. Just it's incurred. To the part 6, rent expense of $300. They paid the expense of rent. And when you are incurring some expense, you need to pay some cash out of the business. So two accounts. One of them is rent expense. Rent expense, of course, it's part of EA, expense, and incurring or increase of that will be debit. For how much? $300. Rent expense will be debited by $300, and another side I have paid cash for that, and my level of asset decreased, so cash will be, I'm not hearing, okay, yeah, well, credit. Cash is credit by $300, and this is it. I need to post that. I need another account as the name of rent expense. Rent expense. and rent expenses debited by $300. Of course, I have an account for cash for $300. There will be credit $300. That's it related to example. How we gonna close that? How we gonna transfer that to rest of the process, accounting cycle, which is trial balance? How we gonna do? Be with the channel. Of course, there will be videos in very simple word that we will explain to you, and be with the channel only. Till this point, the focus was to how the debit and credit will work and how the posting will be done to the ledger account, which we did already. Let's go. As always, we have practice question. Practice question, and the question said, what is the double entry to record receipt of cash from an account receivable? The receipt, some cash against the account receivable of the business. These kind of practice questions are very important. Even you are attempting written test of a job, and undergraduates and postgraduates, the nature of these kind of questions are a lot. Only you need to focus on that. This is a sample. You need to practice by yourself more and more. Practice will make you strong. But what I recommend, pause the video now, focus on that, and come back to me. Pause the video. But let's continue. One point. What's the answer? Okay, good. Let's work together. What is the double entry to record receipt of cash from an account receivable? I have received some cash, so my level of cash will increase. Cash was part of EA, asset. Asset increase was debit. So what I will do? My cash was increased. Cash increased by how much? Not clear, but at least cash is debit. And my account receivable decreased. So when the account receivable decreased, it means an asset decreased. It's part of current asset. So asset decrease and asset decrease will have how the effect is? Decrease in asset, increase was debit, decrease was credit. So my receivable or account receivable will be credit. Which option is now correct? We have four options. The first A1 is debit sales, not correct. B, debit receivable, not correct. C, debit cash, wow, it's maybe. And credit sales, no, it's not correct. And the fourth one is D, debit cash and credit account receivable or receivable. This is it. The right option is option D. Thank you so much for being with us till end of this video, and appreciate your time. Do me a favor, subscribe to the channel and press the notification button to receive the alarm and notification for the new videos. We have the very strong videos, very professional videos on business studies, not only accountancy, not only financial accounting and reporting, lots of the same. The focus is here to bring these strong videos in very simple wording to you. So do one thing, share that channel with your friends, let them hear from us, let them understand these secrets in a very simple word, and thank you for supporting us. Let's all grow together. By subscribing, we will grow as well. Thank you.